Are you looking for a safer way to grow your money? Would you like to know about a strategy used by the largest banks in the world to contractually grow their money by 50 to 60% every 5 to 6 years? Whether you're a business executive, an attorney, or own your own business, this strategy will work for you. Of course, we all want to participate in the upward movement of our money and want to protect ourselves from losses. Perhaps the market crash of 2008 is still fresh in your mind, where literally Americans lost 30 to 50% of their wealth in a very short period of time. Maybe you hate the stock market, but just don't know where else to place your money. When you place your money in the stock market, you really only have two options. You hope your money goes up, or you pray it doesn't go down. There is a better way. Don't grow equity, buy it. For example, let's say that gold is trading at $1,400 per ounce, and you are able to legally and ethically buy it for $1,000 per ounce. You'd be rich because of walking into $400 worth of equity per ounce. Or, let's say that Google stock was trading for $530 a share, and you were able to legally and ethically buy it for $350 a share. You'd be walking into equity from day one, and you'd be rich. This style of buying equity versus trying to grow it can only be done in two asset classes. The first is real estate, where you buy homes at a discount and walk into equity, hoping to turn around and flip it for a profit. The other strategy is something used by banks and large hedge funds called a life settlement. Imagine for a second that a husband buys a very large life insurance policy on himself to take care of his wife after he has passed away, thinking that women usually outlive men. Unfortunately, due to life circumstances, the husband ends up outliving his wife. He is now left with a large life insurance policy he no longer needs, yet he still carries very expensive annual premiums that are cutting into his lifestyle and the future money he will need to live on. But instead of canceling his policy, he can sell it on the secondary market, and for very good money. Let's say, for example, that he owned a $5 million whole life policy and he'd built up over time $500,000 in equity. At this point, he has three options available to him. Number one, he can let the policy lapse and get nothing for his time and money. Number two, he can return the policy to the issuing life insurance company and get his $500,000 of equity. Number three, he can sell his policy on the secondary market for $1.5 million. He can get nothing, $500,000, or he could get $1.5 million. If this were you, what would you choose? Should he choose to sell his policy, that is a 300% increase on his money. This is a very big win for him and would place him in a good financial situation for the rest of his life. But it also ends up being very good for our investors. Through life settlements, our investors are able to walk into 50 to 60% equity from day one. Now imagine this, having a contract in place that dictates exactly how your money will increase. Having your money inside of a strategy that has no market risk whatsoever. And lastly, having a guaranteed insurance contract in place that is backing the growth of your money. With life settlements, you don't have to worry about losing or what the stock market is doing today or tomorrow. You only participate in the upward movement of your money, and everything is contractual. With life settlements, we increase our opportunities for upward movement and remove completely our chances of downward losses. To learn more about how to protect your money and get it outside of Wall Street, contact our office